What the hell just happened to gold price? You might be asking yourself. That is, if you actually talk to yourself. We do all talk to ourselves, right? It's kind of a frustrating thing watching spot prices of precious metals. If you're expecting high inflation numbers to send gold and silver higher, well, you have to be wondering if something is broken, something is being manipulated. Now, the metals market might be a little bit broken, it might be a bit manipulated, but the factor that's driving gold prices right now, and silver prices too, is treasury yields. Now, even that is maybe a degree or two away from the true factor. We'll get to it, but treasury yields are a visible cue for what's going to happen to gold and silver. Particularly the 2 years, since it's ultra sensitive to Fed policy. Now that jumped on Tuesday to 3.73%. That's the benchmark, and that's the highest it's been since November of 2007. If you were zeroed in on inflation instead, you'd think the price of this gold would be going up. Now, August Consumer Price Index numbers just hit, and we saw a month-over-month gain when most investors were expecting a decline. So at 8.3%, inflation is still clearly running out of control, and even economists and investors underestimated where CPI would be this month. And now we're getting somewhere because those investor expectations lead to trade activity, and that's actually what drives the price swings that we're seeing. Markets are pricing an 100% chance that the Fed will increase rates by 75 basis points for a third time next week, so we aren't seeing a direct reaction to inflation. We're seeing the expected result of the Fed's reaction to inflation. Now that comes in a few ways, but a primary factor is the benchmark lending rate, and that dovetails with treasury yields. I have to just say here that I never thought that I would be doing a video on bond yields. It's incredibly boring to me, and I wouldn't be talking about them at all if they weren't affecting the price of gold and silver, but here we are. The treasury programs, they're competitors to gold and silver in normal years. When you hear that investors are rushing to safe haven assets, you might think that that means gold, but we're also looking at treasury programs as well. And now we're seeing those returns jump up, and that makes it really easy to park some cash and get a guaranteed return. Now that benchmark rate that I mentioned earlier, 3.73% for 2-year bonds, that might not seem like a big deal, but if you look at composite rates on something like a Series I bond, it has a composite rate of 9.62%. And there just aren't many ways to get a guaranteed 9.5% rate of return on anything really. So people who might normally park that money in gold, they might be jumping on treasuries instead. Now, it's not sexy, but that's a big reason that gold and silver aren't shooting up with inflation right now. There are just other places to park cash that have a guaranteed return. Now, if you watch on a day like Tuesday, maybe you see CPI hit 8.3%. We all know inflation is higher than that, but then you see the price of gold and silver nosedive. Now, what you're seeing is not gold and silver dropping because inflation is higher. You're seeing traders scrambling and moving their positions based on what they think will happen based on those numbers. Now, in this case, they're expecting the Fed to increase rates by 75 basis points next week. That shouldn't be a surprise, but now it's virtually locked in, so we see some short-term chaos. And that is usually what we see people reporting on, people making videos on. It's a knee-jerk reaction. And that reaction typically begins to retrace even by the end of the day. So that's really the reason that I'm making this video, is partially to point out what to look for if you're trying to figure out spot price of metals, but it's also to speak to the impression that I think people give by reporting on those knee-jerk reactions. Now, if you watch a lot of videos in this space, you're going to see people say metals are surging, metals are plummeting, how high can they go, how low can they go, but they're making those videos before the actual movement has played out. And it makes it seem like metals should be tracking against inflation directly when that isn't the case. That inflation hedge that you hear about, it is not reflected in intraday trading. Inflation can come in hotter than expected and metals can still drop at the time of the news, but over the longer period of time, You see that sustained inflation is met by higher metals prices. You need to look past a day here, a day there, and look at the past 20 years. The big question is where the price of gold and silver are going over the next few years, and of course I don't know. I have some guesses, but because there's really no way for anyone to know, I try to take advantage of those knee-jerk market swings and buy on drops when I see them. I made a quick purchase when gold hit $16.97 today. Today's Tuesday. Maybe that will be lower by the time this goes live, but traders don't stop and count to 10 and think things through. So if I see an immediate drop or an immediate spike even, I guess I usually assume that the first reaction is an overreaction, and maybe I can get a quick discount at that time. Okay, so let me give a quick reminder here. I'm just some guy who makes videos on the internet. Kitco has a headline out right now. They know a lot more than I do. Their headline reads, gold prices drop to session lows as US CPI rises 0.1% in August. And then they go on to focus on CPI rather than the DXY, rather than trader sentiment, and rather than treasury yields. Now, like I said, they know more than I do, but I see a lot of content creators. It doesn't matter if they're an actual news organization or they're other guys making videos on YouTube. I see them pushing out swing news. Gold is down, gold is up, repeat. And I do that sometimes too. Usually I try to do it if I feel like it's a possible pivot. But most of the articles, most of the videos, they don't actually focus on the longer term trend. So if you'd like to get a sense of that trend, you almost have to see those daily headlines for what they are, see the volatility for what it is, and then more or less ignore it. Okay, point made. So let us know what you think. Looking past today's price movement, do you think gold is on its way up or on its way down? Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.